Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Zeta Global.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And before we get into today's stock, here is a useful tool for investors who want a faster and cleaner research workflow. You can check out stockanalysis.com Pro through the link below in the description. Use discount code ITP for 10% off. Stockanalysis.com is lightweight, fast, and works on desktop, iOS, and Android.
Right.
Yeah, the free version is useful for checking stock prices, financials, charts, forecasts, and news. But if you want deeper research, stockanalysis.com Pro gives you no ads, saved screeners, watch lists, portfolios, long-term financial history, dividend history, analyst filters, ETF data, and exports to Excel, CSV, and Google Sheets.
Which is a ton of data.
It really is.
Yeah.
And Pro comes down to about $5.93 per month when billed annually after the discount. For heavier users, the unlimited plan adds unlimited downloads and unlimited stocks per watch list and comes down to about $14.93 per month when billed annually after the discount.
Nice.
Remember, stockanalysis.com is a research tool, not financial advice. It does not tell you what to buy or sell, and it does not guarantee investment results. Always do your own research and make your own investment decisions. This is an affiliate link, so we may earn a commission if you use it at no extra cost to you.
Absolutely. So what if I told you that the most important artificial intelligence company of the next decade isn't the one building the flashiest chatbots or generating AI images?
The ones making all the headlines.
Exactly. But rather, the company building the invisible plumbing that makes all of those frontier models actually useful for enterprise businesses. Because usually, when you analyze a company in the marketing software space, you're looking at a very traditional set of expectations.
Right. You check their software margins, their client acquisition costs, their churn rate.
Yeah, it is a highly predictable, almost sleepy category.
It is a very established sector. The legacy software as a service model for running marketing campaigns is a known quantity on Wall Street, which is honestly exactly why the market has mispriced what is actually happening behind the scenes.
Right, because when you peel back the layers on Zeta Global, that traditional marketing software blueprint just kind of disintegrates. We are no longer looking at a simple digital advertising firm.
Not at all. What you are looking at is fundamentally an underappreciated artificial intelligence infrastructure giant.
Yeah.
And the most fascinating part is how it has been hiding right in plain sight. Wall Street analysts have traditionally looked right past it, tossing it into the same bucket as every other legacy software vendor.
Which is a massive oversight.
Huge. Because when you dig into the institutional buying flow, you realize the smart money is quietly but very aggressively accumulating shares. They're realizing that the specific data ecosystem Zeta has built over the last decade is the exact plumbing perfectly positioned for the current AI revolution.
All right, let's move into the wealth building context.
To understand why institutional funds are accumulating this stock, you have to connect this to a broader, multi-year portfolio strategy. You are looking at a company undergoing a massive financial transition.
Okay.
In the tech sector, early-stage companies usually endure a prolonged hyper-growth phase. They burn through cash at an alarming rate just to aggressively capture market share and prove their concept.
And as an investor who naturally leans cautious, that is where my risk radar always starts pinging.
Right.
Growth is great, but cash is king. Building an AI thesis on a company burning cash is like building a skyscraper on quicksand. But doing it with robust free cash flow is like building on a bedrock foundation.
And that is exactly what separates Zeta Global right now. They are actively transitioning out of that cash burn era. They are maturing into a highly lucrative, free cash flow generating machine.
Hold on, let me stop you there. Because multiple expansion and re-rating are terms Wall Street loves to throw around. Let's break down the mechanics of what that actually means for a regular investor.
Sure.
It's not just about a stock price randomly going up. I mean, how do we know this isn't just a hiding in plain sight narrative?
Well, multiple expansion is a physical shift in the mathematical formula the market uses to value a business. Think of it like real estate. If you own a commercial building in a sleepy industrial park, it might be valued at 10 times its annual rental income.
Right.
But if a massive booming tech hub suddenly expands into that neighborhood, the entire area changes. Now, buyers are willing to pay 20 times the rental income for that exact same building. The building itself didn't change overnight, but the multiplier did.
And in this case, Zeta is moving out of the sleepy legacy software neighborhood and into the ultra-premium core AI infrastructure neighborhood.
Exactly. Because they are generating robust free cash flow, The market isn't just pricing them on speculative future promises anymore.
Hmm.
Wall Street is physically changing the math, shifting them to a must-have AI valuation multiple.
Which is historically one of the most powerful wealth-building mechanisms in the equity markets. You capture the stock while it is actively being repriced.
Right.
But I have to play devil's advocate here. As a long-term investor, how can you be absolutely certain this isn't just a brilliant marketing gimmick? Literally every software company on Earth is frantically slapping the letters A and I onto their quarterly pitch decks right now just to get that exact valuation bump. How do we know this is a real structural transformation?
That is the ultimate stress test.
Mm.
And the answer lies entirely in their operational data and their architectural partnerships. It is not theoretical at all.
Now let's look at the fundamentals.
If you want undeniable proof that this isn't just a marketing gimmick, you start with their first quarter 2026 results. We are seeing the exact quantitative traits of a market-beating asset.
What specifically?
They delivered a significant top-line revenue beat, rising sales across their enterprise cohorts, expanding profit margins, and most importantly, increasing returns on invested capital.
And because we just established that they have a bedrock of free cash flow, that specific financial health is what allows them to organically fund all of this research and development into AI.
Exactly.
They are building out this advanced infrastructure using their own profits without needing to issue new shares and dilute the people listening to this right now.
That financial independence is a massive competitive advantage. But their true economic moat, the thing that keeps competitors out, is their proprietary data asset. They have systematically created an ecosystem with incredibly high switching costs for enterprise marketers.
Yeah.
And they are fortifying that moat through some highly strategic, deeply technical alliances. Have you looked closely at the Snowflake Open Semantic Interchange Initiative?
I have, and we need to spend some time on this because this is where the mechanics get incredibly interesting. For those who aren't deep in data architecture, break down what Open Semantic Interchange, or OSI, actually does.
Sure.
Why does data need to be standardized in the first place?
Because it is the biggest bottleneck in enterprise artificial intelligence today.
Yeah.
Major corporations have decades of incredibly valuable data customer buying habits, granular marketing metrics, historical sales trends.
Right.
But all of that data is fragmented. It sits in dozens of different software silos formatted in entirely different coding languages. If you try to feed that raw, chaotic data into an advanced AI model, the model simply cannot read it. It crashes or it hallucinates bad answers.
So if the artificial intelligence model is a master chef, that raw enterprise data is basically a pitch-black pantry full of completely unlabeled dented cans. The chef might be a genius, but if they don't know what ingredients are inside the cans, they cannot cook the meal.
That is the perfect analogy. What Zeta is fundamentally doing with their Snowflake OSI integration is walking into that dark enterprise pantry, turning on the lights, standardizing every single label on every single can, and organizing the shelves.
Which makes them incredibly sticky as a vendor. Once Zeta is embedded at that foundational level, standardizing your core data architecture alongside Snowflake, a chief technology officer cannot just easily rip them out and switch to a cheaper competitor. The switching costs are astronomically high.
Precisely. And then you stack their direct advertising partnership with OpenAI on top of that organized pantry.
Yeah.
That creates a generational moat against legacy marketing clouds that simply do not have these direct integrations with frontier models.
It's like Zeta hasn't just built a toll booth on the enterprise AI data highway. They have built the only way station that translates the cargo into a language OpenAI can actually understand.
Right.
If an enterprise wants to securely use a model like ChatGPT to analyze their internal marketing data, they have to drive that data through Zeta's specialized station.
That is the core of the thesis.
Mm-hmm.
But to your earlier point about risk, I know you were looking at some recent institutional movements that raised an eyebrow.
Yes. I want to point out a recent fundamental event. A major institutional fund just realized a $30 million sale of their Zeta stock right after the price ran up